We are now moving on to segment 6, that is time of supply. In this chapter, we are going to cover 3 sections. Section 12, that is time of supply in case of goods. Section 13, time of supply in case of services. And section 14, time of supply in case of change in rate of tax. Time of supply is relevant for the purpose of determination of due date of payment of GST as well as exchange rate as well as the rate of GST. So, but the time of supply for a particular transaction again depends upon the due date of invoice. That due date of invoice is given under section 31. As per section 31, we have 147, that is subsection 1, subsection 4 and subsection 7, which deals with the due date of invoice in case of goods, whereas in case of services, subsection 2, subsection 5 and subsection 6. So 31 subsection 1 is applicable in normal cases, subsection 4 is applicable in case of continuous supply of goods, and subsection 7 in case of sale on approval or return basis. So in case of sale on approval or return basis, first the goods will be delivered, and if the recipient accepts, then only it will be considered as sale. So what is the due date of invoice? We need to see whenever the recipient is accepting, that is the date of supply, or 6 months from the date of removal. Even if the recipient is not accepting within 6 months from the date of removal, on expiry of 6 months from the date of removal, it is deemed to have been sold. So therefore, we need to raise the invoice within 6 months from the date of removal or date of acceptance by the buyer, that is date of supply, whichever is earlier should be taken. This is sale on approval or return basis. Whereas in case of continuous supply of goods, continuous supply of goods means that there will be successive supply of goods for which payments are settled on a periodical basis, whether or not the goods are provided by means of wire, cable, conduit, etc. So the pipeline may be there, may not be there, all these are irrelevant. So what we need to see is that, is there a successive supply of goods for which payments are settled on periodical basis? Is there any time restriction with respect to this? No, there is no time restriction. In case of continuous supply of service only, we have a time restriction that it should take more than 3 months to complete like that. But in case of continuous supply of goods, we don't have that point. So for continuous supply of goods, what will be taken as the due date of invoice? So first we need to see whether the payments are received based on account statement or not. If the payment is based on account statement, means we are issuing an account statement, and in that account statement we will mention how much amount will be receivable. Then for that amount which is receivable based on account statement, the account statement date will be taken as the due date of invoice. Whereas the payments are received on ad hoc basis irrespective of the account statement, as and when the payments are received, that should be taken as the due date of invoice. This is in case of continuous supply of goods. Whereas in case of normal situation, so first in the question you need to check, is it sale on approval or return basis? If not, continuous supply of goods. If not, then only balancing figure, normal cases. Again, in normal cases you need to check whether it is supply involves movement of goods or supply does not involve movement of goods. Supply involves movement of goods means under the contract of supply, goods are taken from one location to another location, that is supply involves movement of goods. If supply involves movement of goods, the due date of invoice is at the time of removal. So whenever the goods are removed, that will be taken as the due date of invoice. If supply does not involve movement of goods, at the time of delivery, so whenever the goods are delivered or made available to the recipient, that will be taken. So this is the due date of invoice in case of goods. Then in case of services, subsection 2, subsection 5 and subsection 6. Subsection 2 is normal cases, subsection 5 is continuous supply of services. So 4 is continuous supply of goods and 5 is continuous supply of services, and subsection 6 is cessation of services. Cessation of service means abruptly stopping the service is known as cessation of services. Whenever there is a cessation of service, immediately upon cessation, the invoice needs to be issued for the amount which will be retained. For example, we enter into contract to provide the services for 50 days, and each day 1 lakh rupees will be taken as the value of supply. So we provided the service for 5 days, and thereafter we have stopped the services. Means for that 5 days we need to raise the invoice accordingly. So for 5 lakh rupees we need to raise invoice immediately upon cessation. So we don't have to wait, etc. and all. And in that case, what if the other person claim the damages and we pay the damages to him? So that will be compensatory in nature. That will not be treated as consideration in the hands of the other person. Then in case of continuous supply of services, a service which takes more than 3 months to complete. So the time limit is there, more than 3 months to complete, and involves periodic payment obligations, then only it will be called as continuous supply of services. In that case, first check whether the due date of installment is ascertainable from the contract. So for example, renting of immobile property, usually the rental agreement will be for 11 months, 12 months, 3 years like that. So in this case, it is a continuous supply of service because it is more than 3 months and involves periodic payment obligations. So in that case, clearly they will be mentioning in the rental agreement by 5th of every month you have to make the payment. As the due date of installment is ascertainable from the contract, that due date of installment will be taken as the due date of invoice. Whereas if the due date of installment is not ascertainable, but the payment is linked to completion of event, usually in case of construction contracts, upon completion of 30% or upon completion of 60%, so this much amount will be receivable like that. So they will be linking it to completion of event. So whenever that event is completed, that will be taken as the due date of invoice. And in the absence of that, so there is no installment date, there is no payment linked to completion of event in the absence of these two. So whenever the payments are actually received, so payment is linked to completion of event as and when it is completed. So if nothing is ascertainable, as and when the payment is received. Then normal cases, that is balancing figure. If it is not a continuous supply of service, if it is not cessation of service, then it will be balancing figure. We need to see whether it is banking or insurance or not. If it is banking or insurance, we need to see the time limit for issuing invoice. The due date of invoice is 45 days from the date of completion. If it is other cases, 30 days from the date of completion. So this is the due date of invoice. There is one subsection which is missing, that is subsection 3. That subsection 3 we will be connecting in tax invoice, debit notes and credit notes. Then we have to understand the GST implications on vouchers. So there is one important amendment for this particular Finance Act 2025, May 26 onwards. So this amendment is applicable, that is time of supply. Previously we had in case of vouchers 12 subsection 4 and 13 subsection 4. In case of issuance of voucher, the time of supply we need to check with this identifiable voucher at the time of issuance of voucher, non-identifiable voucher at the time of redemption, like that. But that provision is now omitted. So which means vouchers are first of all not treated as supply. So at the time of issuance of voucher, the GST liability shall not arise. So due to that reason only, that particular time of supply provisions for the vouchers has been omitted. So here they have clarified clearly as to why voucher is not a supply. Vouchers are divided into two: prepaid vouchers and gift vouchers. Prepaid vouchers means we spend money to buy the voucher, like Flipkart gift voucher or Amazon gift voucher or Shopper Stop, Lifestyle, like that. Lot of shops we can pay money and buy the gift voucher. So that is called as prepaid vouchers. Prepaid instruments or prepaid vouchers are recognized by RBI. Due to that reason, it will fall under money. So money is neither goods nor services. Due to that reason, it will be excluded from supply, which means that we are not required to pay GST in this case. So voucher recognized by RBI, treated as money. Prepaid instruments, not a supply. What if it is not a prepaid voucher? Normal gift voucher which are given. For example, when you do shopping for a particular amount, so you'll get 500 rupees off voucher or 1500 rupees off voucher, like that and all. So what is the treatment of this voucher? These are gift vouchers not recognized by RBI. Then in that case, it will be treated as actionable claim, because you have right to receive the benefit and it can be transferred from one person to another person. It is legally enforceable and the holder of that instrument, voucher, is entitled to receive the benefit. So it is an actionable claim, but it will not come under money definition, and it is not specified actionable claim HC block. So it will be other actionable claim. All actionable claim other than HC block is excluded from supply. Due to that reason, there is no GST. So treat as actionable claim, not a supply. Therefore, conclusion is that vouchers are neither goods nor services, but this voucher is treated as consideration towards supply of goods or services. So whenever we issue voucher, there is no supply, but that voucher will be redeemed against some goods or services. So at that time, we are making the supply of goods or services, and the voucher what is redeemed will be treated as a consideration towards it. Okay. And this particular voucher issuer who is issuing the voucher through the dealers. So how that model is, if it is on a principal to principal model, so I am the voucher issuer and I appoint a distributor. So I will sell the voucher to the distributor at say 80 rupees. That distributor will sell to the end users or customers or corporates at 100 rupees. Now in this case, what will happen is that I am selling to him, that is not a supply. He in turn makes a sale, that is also not a supply. So there is no GST liability in this case. Even though the dealer is making a margin of 20 rupees, there is no GST payable with respect to this. Then next, suppose if I am appointing an agent and through that agent I am distributing the voucher. I am the voucher issuer and I appoint an agent. Through that agent I am making sale to the end users like corporate customers or etc. Then in that case, that agent will receive a commission. That commission alone will be covered under supply and chargeable to GST. Commission or service fee by whatever name called. Then sometimes in order to market the voucher, I will be receiving some marketing services or any designing services, etc. All those will be covered under supply, that is not excluded from supply. Services provided to voucher issuer by way of advertisement, co-branding, marketing, technology service, etc. are chargeable to GST. Then in case of breakage, so breakage means expiry of voucher. I gave a voucher, but that voucher not got redeemed. So when the voucher not got redeemed, what will happen? So there will be a breakage of the voucher. So whenever there is a breakage of the voucher, so which means the money is already collected. So whether we need to pay GST with respect to that? No. So the voucher got expired. Even though amount is collected, that will be treated as money received but there is no obligation to do anything in return, so that is not at all treated as consideration. So in case of breakage, that is expiry of voucher, as the same is not redeemed even though the amount received against that voucher, GST not payable on the amount retained. So this is the summary. RBI recognized the prepaid instruments, GST not applicable because it is treated as money. Non-PPI vouchers also GST not applicable because it is treated as actionable claim. Principal to principal sale of vouchers also no GST because it is not a supply. Agency distribution, GST is applicable only on the commission received. Any additional service, GST applicable on the service charges. Expiry of voucher, breakage, GST not applicable because the supply did not happen against this voucher. So whenever you get a question related to vouchers, so what is the treatment to be followed? Simple. You need to first see what is the supply of goods or services, and the voucher whatever is received will be treated as the payment received. So the voucher redeemed date will be taken as the payment received date. That is the treatment you need to follow for the questions that you may get in exams related to the vouchers at present. Now, time of supply in case of goods and services. Section 12 deals with time of supply in case of goods, 13 deals with time of supply in case of services. And 12 subsection 1, 13 subsection 1 talks about the purpose of time of supply is to determine the due date of payment of GST. The liability to pay GST depends upon the time of supply for the transaction. Subsection 2 deals with time of supply in case of FCM. Subsection 3 deals with time of supply in case of RCM. Subsection 4 is now omitted, it is not there. Subsection 5 time of supply in residual cases, and subsection 6. So time of supply in case of interest, late fee or penalty for delay in receipt of consideration. So in case of 12 subsection 2 time of supply goods FCM. So first we need to check, is it composition scheme or specified actionable claim versus others. So if the person is under composition scheme, there is a person who is making sale of goods and he is under composition scheme, or a person who is making sale of specified actionable claims. In that case, we need to take due date of invoice, whatever is determined so far, or the actual date of invoice, the date on which invoice is actually issued versus the date of payment. So whichever is earlier should be taken. So due date of invoice or actual date of invoice or date of payment, whichever is earlier. What about the others? Other than composition scheme or specified actionable claim, only due date of invoice or actual date of invoice, whichever is earlier, which means that date of payment is irrelevant. So therefore, whenever the payment is already received, even in that case, the date on which they are required to give invoice or the date on which invoice is actually given, that will only be taken, but the payment date is irrelevant. So which means GST not payable on advances. Whereas a person opting for composition scheme and specified actionable claim is required to pay GST on advances. Then time of supply in case of services under FCM is given under 13 subsection 2. So here we need to see whether the invoice is given within the due date or not. If the invoice is given within the due date as discussed above, then we need to take the date on which invoice is actually issued or the date of payment, whichever is earlier. What if the invoice is not at all issued within the due date? So if it is issued beyond that, so then in that case completion date or payment date, whichever is earlier, should be taken. So whether GST is payable on advances, naturally yes, because date of payment is one of the dates. Suppose if the payment falls earlier, then on the base of the payment received we need to pay GST. So GST is payable on advances in this case. That is with respect to goods FCM and services FCM. Then goods RCM. In case of goods RCM, it is given under section 12 subsection 3. 12 subsection 3 says that the date on which goods are actually received by the recipient, or the date on which recipient is making the payment to supplier, or 31st day from the date of invoice given by the supplier, should be taken. What if supplier is not giving the invoice? Then 12 subsection 3 is not applicable. So whenever 12 subsection 3 is not applicable, we have a proviso which says that the date of entry in the books of recipient will be taken as a time of supply. So here the invoice which is given by the supplier should be taken and 31st day from the date of invoice. And suppose if the supplier is unregistered, instead of giving invoice, some other bill or some other document he might be giving, so even that also can be considered as the invoice. Not necessary that it should be tax invoice, any document given by the supplier. What if the supplier is unregistered, he has not given any document? Then the recipient has to give the invoice. Whether we will take that? No, that we will not take. That is only for 13 subsection 3, not for 12 subsection 3. 12 subsection 3 always 31st day from the date of invoice given by the supplier, whichever is earlier, that should only be taken. Next, instead of invoice, any other document in lieu of invoice given by the supplier. Whereas in case of 13 subsection 3, this is 12 subsection 3 what we have seen. 13 subsection 3 says that services under RCM. So we need to know what are the services covered under RCM and goods under RCM in the question. So that will not be specified. Depending upon that only you need to apply this provision. In case of service under RCM, the date on which payment is made to supplier, or 61st day from the date of invoice issued by the supplier, whichever is earlier, should be taken. Here the date of receipt of service is irrelevant, and here invoice given by the supplier or any other document given by the supplier, from that date 61st date should be taken, whichever is earlier. What if the invoice is not given by the supplier? Invoice is given by the recipient is there. So because when the supplier is unregistered and the supplier is not issuing the invoices, the recipient will give the invoice to the supplier within 30 days from the date of receipt of goods or services. Then we need to take the date on which payment is made to the supplier, no change, but instead of 61st day we need to take the date on which invoice is issued by the recipient. So not the due date, it is the actual date by which the recipient is issuing the invoices. Date of self invoice to the supplier, whichever is earlier, will be taken. But here, so we have separately, but in case of 12 subsection 3 we don't have the provision like this. Only in case of service RCM they have divided like this. Then vouchers are omitted. So when there is issuance of voucher, we don't have to pay GST, but whenever the vouchers are redeemed towards the supply of goods or services, so 12 subsection 4, 13 subsection 4, which prescribe time of supply in case of voucher, is omitted, and at present time of supply of goods or services supplied against such vouchers is to be determined as per the regular provisions of 12 and 13. Again 12.2 or 12.3, 13.2 or 13.3, depending upon that. But just remember, the voucher redeemed date will be taken as the date on which payment is received. Then in case of 12 subsection 5, residual provisions. Residual provision, there is no difference between goods and services. So 12.5 and 13.5 will be same. Residual provisions will be applicable when the time of supply cannot be determined as per the above subsections. Then residual provision says, first check whether the periodical return is required to be filed. Who is required to file periodical return? Only a registered person is required to file periodical return. Then whenever is the return due date, that will be taken. Where periodical return is not required to be filed, so the date on which payment is made, that should be taken. So periodical return has been filed, due date of filing return. Periodical return not filed, date of payment of GST will be taken. Suppose if there is interest, late fee or penalty for delay in receipt of consideration, it will be always taxable on receipt basis. Generally in GST, many things, everything is taxable on accrual basis, but in this case it is taxable only on receipt basis. So whenever the money is actually received, at the time only GST will be payable. But this is not interest on account of loans, advance, deposits, because that is exempted. This is on account of interest in delay in receipt of consideration. So that is a treatment with respect to this, and this is common between goods and services. Then additional points, if you see, first we need to see the date of payment. The date of payment from supplier point of view, date of entry in their books or date of credit in their bank account, whichever is earlier. From recipient point of view, the date on which payment is debited in their bank account or the entry in their books of accounts, whichever is earlier. Supplier point of view, credit in bank account. Recipient point of view, debit in the bank account. In case of FCM, we need to see from supplier point of view. RCM, we need to see from the recipient point of view. Then in case of goods other than composition scheme or specified actionable claim covered under FCM, on advances GST is not payable, and when the GST is payable, whenever the invoice is issued or the due date of invoice or actual date of invoice, whichever is earlier. But service is not like that. In case of services covered under FCM, GST is payable on advances. What about goods and service under RCM? Goods and service under RCM, definitely GST payable on advances, because date of payment is one of the date which is specified. Then next we have one point. In case of services, as GST payable on advances, or even in case of goods, specified actionable claim and composition scheme, if they are receiving some excess amount that is beyond invoice, for example, invoice is for 13,200, but the amount received is 14,000, some excess amount is received. For this excess amount, what is the treatment? So two options are available. Either they can go by the regular provisions, that is, for this excess amount, next period only we will give invoice, so payment is received now, so payment received now, or next period when we give the invoice, whichever is earlier, payment received will be taken as the time of supply. Or with respect to this excess amount, whenever you are raising the invoice in future, at the time itself will be taken as the time of supply. But this is only for the excess amount if the excess amount is up to 1,000. If the excess amount is beyond 1,000, this provision is not applicable, which means that they have to go by the regular way, that is invoice date or payment date, whichever is earlier. This up to 1,000 rupees received in excess of invoice in case of service covered under FCM, goods under composition scheme or HC block, that is specified actionable claim. Time of supply can be date of invoice or determined as per section 13 subsection 2. The supplier has the option to choose. Then 4, in case of supply of services between associated enterprises, whenever there is a supply between the associated enterprises, so we need to see the associated enterprise, supplier located outside India and the recipient located in India. Associated enterprises as per Income Tax Act 1961 section 92A, that should be taken. Now we need to see import of services. Import of services covered under RCM. So what should be taken as the time of supply? The date on which payment is made to supplier or 61st day. There is no invoice between associated enterprises, so even recipient also will not give invoice sometimes. So due to that reason, we need to take the date of entry in the books of recipient will be taken. So in case of services between associated enterprises where supplier is outside India and recipient is in India, the time of supply shall be date of entry into books of recipient or the date of payment, whichever is earlier. Then whenever the goods are taken outside India for exhibition, first of all, it is not a supply because it is just taken outside India for exhibition. So section 7 subsection 1 A, B or A or C does not satisfy. So therefore it is not a supply and it is not a zero rated supply. But we have a deeming fiction, sale on approval or return basis, section 31 subsection 7. If the goods are not brought back within 6 months from the date we are sending it for exhibition, it is deemed to have been sold there and we need to raise the invoice in the name of the exhibition where we have taken that goods, and accordingly we need to pay the applicable GST, and it will also qualify for zero rated supply and we can claim the refund. But if you are claiming the refund, we should be careful because we need to realize the proceeds within the time limit under FEMA. Okay, so but when goods are taken outside India for exhibition, it is not a supply, but when it is not brought back within 6 months, it is deemed to be supply as per 31 subsection 7. Then section 14. Section 14 is applicable in case of time of supply in case of change in rate of tax. So what is the time of supply in case of change in rate of tax? This is applicable. Section 14 is applicable in case of services and in case of composition scheme and in case of specified actionable claim. And between 3 dates there is a change in rate of tax. What are those 3 dates? Date of completion, date of invoice and date of payment. Between these 3 dates there is a change in rate of tax. As right now there is a change in rate of tax this particular area because recently a lot of changes in rates have happened. So therefore definitely there is a high chance that this exam, so they will be testing a question on section 14. Very important. So date of completion we need to see. If the completion is before change in rate, so we need to take invoice date or payment date, whichever is earlier. So if the completion is before change in rate, first to apply section 14, between these 3 dates there should be change in rate, and a completion is before change in rate, then invoice or payment whichever is earlier will be taken. Whereas if the completion is after change in rate, if the completion is after change in rate, check whether both invoice and payment is before. Yes, then invoice or payment whichever is earlier. What if one is before, one is after? Then whichever is later will be taken. If both invoice and payment are before change in rate, invoice or payment whichever is earlier. Suppose if one before and one after, then we need to take whichever is later. Okay, so that is this. And here what should be taken as a date of payment? If the payment got credited within 4 working days from the change in rate, then we need to see the date of entry or date of credit whichever is earlier. If the payment is credited beyond 4 working days from the change in rate, so that is crucial. We need to first check the date of payment, whether the payment got credited within 4 working days or beyond 4 working days. If it is beyond 4 working days from the change in rate, we need to see the date of credit in the bank account only as the date of payment. That is this. If the payment is credited after 4 working days from change in rate, the date of credit in bank account is only relevant. Then next we have circulars on time of supply. First one is related to HAM project, that is hybrid annuity model project. In case of HAM project, is it like a continuous supply of service? Yes, it is a continuous supply of service. Being a continuous supply of service, the due date of invoice will be, if the event is based on completion of, like payment is based on completion of event, whenever the event is completed, if the due date of installment is ascertainable, the due date of invoice is the due date of installment. So it's a continuous supply of service and we know how to determine the due date of invoice. Being a service, because in hybrid annuity model project, first they will lay down the road and thereafter they will do the maintenance of the road also to National Highway Authority of India. So this particular activity to NHAI, we don't have any exemption. And the time of supply will be if invoice is issued within the due date, invoice date or payment date whichever is earlier. If invoice not issued within the due date, completion date or payment date whichever is earlier. Now what will be the completion date? The completion date is nothing but the due date of installment. Whenever the installment is due, that itself will be taken as the completion date for that installment, and accordingly we need to determine the time of supply. Then in case of spectrum allocation given by the government to the telecom companies, if it is assigned before 1/4/2016, it is exempted, but it is afterwards, then it will be taxable. So we need to check what is the option exercised by the telecom operator. Is it an upfront option or deferred payment option? If it is an upfront option, means entire amount is paid at a time, then the date on which the payment is made or the date on which the payment is due, whichever is earlier, will be taken. So here the regular time of supply provisions is not applicable because the circular will override. So GST liability arises when the payment is made or due whichever is earlier. Whereas in case of deferred payment option, that is in installments, GST liability arises as and when the installment, same way, installment is due or installment is paid whichever is earlier. Usually in these installments there will be principal component and interest component. For interest, generally we need to take the date on which interest is actually received as the time of supply, but in this case clearly they are telling. So whenever the installment amount is due or paid, whichever is earlier only should be taken. So this will override. In this case, through circular they are creating a overriding provision. And how we will know as to when the installment is due? So there will be a frequency assignment letter, but that is not the invoice. That frequency assignment letter, they will clearly mention on which date what is the amount to be paid, etc. So frequency assignment letter issued by Department of Telecommunication to telecom operator, so will be issued, but that cannot be considered as the invoice. That is just a letter that will be given. Now, so in this regard, one important point is there. So that is like in case of goods under, that is services under FCM. In case of services under FCM, okay, in case of services under FCM, okay, then, or in case of goods under RCM, in case of goods under RCM, or in case of services under RCM, services under RCM, three places here: services under FCM, goods under RCM, service under RCM. Time of supply not ascertainable. Time of supply not ascertainable as per the provisions. As per the provisions, time of supply not ascertainable. Then we need to take date of entry in the books of recipient. Date of entry in the books of recipient. Date of entry in the books of recipient is time of supply. So the date on which recipient has entered in the books. If not available. If not available means what? Say from recipient books also the data is not available. If not available, then time of supply as per residual provisions. Time of supply as per residual provisions, that will be taken as the time of supply. So this is one special point with respect to this. So first we need to check date of entry in the books of recipient. If that is also not available, then only we need to apply the residual provisions. So these are the points related to time of supply chapter.